Good afternoon, everybody. My name is Anthony Kazazis, and I am the director of the NYC Network Group as well as the NYC Real Estate Expo. And today we have Jasmine Willois with us, who will be talking about build your empire with mortgage notes investing. She will be talking about part 2, steps to becoming the bank. And this is a 3-part webinar series that we have with Jasmine. At the end of this webinar, Jasmine will discuss a little bit about part 3 before we conclude. We're here to create independent, competent, integrity, riddled note investors, one member at a time. No matter the size of the community member, we all believe the best way to get traction in any field is by doing. Our mortgage note assistance program was created with the small private placement, family office, and accredited investors in mind, making sure vented inventory is available for those with a proven track record. Providing specialized guidance and a methodology for dynasties and credibility and confidence to the accreditor investor. Jasmine Willois, Managing Director, the Note Assistance Program, will discuss all of this today. Jasmine is the founder of the president of the Note Assistance Program, which offers a proven proprietary system for educating entrepreneurs, accredited investors, and family offices on how to buy non-performing mortgages from big banks, hedge funds, and credit unions. Ms. Willois' unique approach is predicted on her more than 2 decades in the fields of economics, marketing, real estate, and work as a trader on Wall Street during the dot-com era. As a result, she makes the process of buying distressed mortgage transparent and uncomplicated. The Note Assistance Program offers the exclusive trade desk that features an inventory of pre-qualified delinquent nationwide loans that Jasmine's community of clients can purchase. A step-by-step coaching program that goes beyond the basic to guide Ms. Willois' clients through the entire process, from the successful buying of a note to generating a profit. Prior to the founding of the Note Assistance Program, Ms. Willois worked as an equity trader and investment banker for Morgan Stanley and Dean Witter. After losing a close colleague on 9/11, she left the industry and worked as a loss mitigation specialist with GMAC Homecomings. Bit by the bug, Jasmine left the corporate world, America, to chase the freedom and returns of the real estate investments. Alecia Bolton is her guest today, and she will be joining Jasmine. Alecia Bolton has been active in the real estate for the last 3 years, doing everything from wholesaling and lease options to mobile homes and apartment syndications. She originates her first note in January of 2020 and hasn't looked back. In the past year, she has purchased 11 notes in 8 states using joint venture self-directed retirement accounts and her own funds. She's scaling quickly and will be starting a fund to buy pools of notes by the end of this year. Welcome, Alecia. And this should be interesting. Without further ado, ladies and gentlemen, Jasmine.
Hello, and thank you, Anthony, for having us. Definitely we're ready to jump into the slideshow. Definitely excited to have Alecia. She is one of the many community members in what we affectionately call the NAP Nation. So we're going to have her jump in and spend a few minutes and show you some of what she's been doing with us since she's stumbled upon us. All right, so quick disclaimer. Obviously, this is really for educational purposes. Make sure that you check with the right people to confirm whether you should get involved with these things, okay? Of course, before we get started again, thank you, Anthony and Julie, and just New York City network group. We really love working with you guys, and we look forward to doing more and more panel stuff with you in the future. All right, as always, what are we going to learn today, and what are we going to do? I'd like to talk about that and lay out, a guideline for you guys to know what to expect. So first thing, what we plan on teaching today is we're going to do a quick recap because, as I mentioned, this is part 2, right, of a 3-part series. So if you happen to miss part 1, I highly recommend you going back to Anthony's YouTube page, right, and going to finding part 1, and you're going to check out a more in-depth kind of approach and understanding what is a note. But we'll do a quick recap on that. What is the product that we're trading? We're going to talk about the cycle of that, why we're doing it, kind of again overlie what we talked about before, the profit making margin. Then we're going to talk about some of the real opportunities, and some of those are wrapped in the rule of 72. So if you do not know about the rule of 72, we'll touch base on that. That's part of the real why a lot of us do this. Then of course we're going to bring Alecia to the stage, and then we'll talk about our 5K and 5Y and give you kind of our path to education. Today's episode is really about letting you know what the next steps you need to take to become the bank, okay? So, as we talk about what is a note, okay? Remember from the first presentation, we're really buying the paperwork that you guys do if you ever went out and purchased a home using a bank. So if you've ever purchased a home using a bank and you've got a mortgage on it, then you know at some point or another, you may have gotten a letter saying, please send your payment to someone else, right? If that sounds familiar to you, that's what Alecia and I are doing. We are buying your mortgage, right? While you're sleeping or out having a day, working to make sure you get it paid, and we're buying it from the banks. And so these things, these instruments, if you will, are being traded on a daily basis. And so all you have to do is make your payments or not, but just so you know, there's an industry, as a market, should I say, in trading these things. So that's going to consist of the deed and the promissory note. So it's very important that you understand what it is we're buying, because we are not getting keys to a house. So as much as this is real estate related, we want you to understand we are buying the paper, almost like the pink slips for cars and things like that, okay? If you have questions about any of this, Anthony knows how to get in touch with us, and in the end, we'll definitely circle back to how you can get in touch with us for more information. All right. So the life cycle of a note. This is where we're going to spend a good portion of our time so you can kind of walk through what we're doing and why we're doing it. So if you can see the screen, this first vertical approach, when you go from left to right, or however it looks for you guys out there, but from a home buyer all the way to the very end where they're going to get the deed. If you are a very great and astute borrower and you're making your payments on the time and you're going to end up paying your payment for the whole 20 years uninterrupted, 30 years, whatever the loan is, the terms, you're eventually expecting to get the deed, right, to your house. So that's what that straight line is about. You make the payments to the bank. Eventually, they're going to hand you over the deed to the house. Now, there are many different things that can happen if you don't make payments, right? So if you're making payments and the bank is not being paid, if you see right in the bank's not being paid, then at many times what they're going to do is they're going to take your mortgages and they're going to be more enticed to get rid of them and bundle them up and sell them. Now, who, pray tell, is going to buy these things? A lot of people want to know, why would someone buy non-performing paper? It's one thing to buy a loan, but to buy one that no one's paying on, this is knocking me over with a feather, right? Tell me why this is happening. So this is what happens. The buyers of these are small hedge funds, people like Alecia. She says, as she mentioned before, she's going to tell you one of her goals is to create her own small PPM. We'll get into what that is a little later, but it's a fund, right? So there are people, there's a market out there who's going to buy these, whether they're performing or not. If they become non-performing, this is a quick outline of what's going to happen to them, right? And as you can see, on the very far right-hand side, right under deed, it's going to show you that there are exit strategies here. And this is only a few of them. Last episode on season 1 of this, or part 1 of this, I should say, we had discussed that there are about 15 to 20 different exit strategies that you can use to make money and exit from a non-performing note. And so on this quick illustration, you're going to see, you can put it for sale, you can rent it, rent to own. So that's creating even more paper, right? I'm going to show you some things that happen once you go through and foreclose on it, okay? So hopefully this is a helpful slide. Again, this is really the process that we walk you through here with the Note Assistance Program. We help you find and procure the assets, and then we're going to teach you how to successfully, as Alecia will attest to, successfully buy these notes, take them down, and kind of, I guess, tame them, right? Because a lot of them are going to have problems since they're not paying. So they're what we call hairy notes. And what are the next steps? The next step is really thinking about and thinking like a bank, right? And so in order to think like a bank, one of the things that's very important is to understand, in my opinion, some basic equations on what people are using to calculate their returns and why they're incentivized to use this business to do so. And so if you haven't already heard of the Rule of 72, highly recommend you checking it out. There's an article today that was just released about it. It's becoming so popular. So this is something that most of us economics majors and people like that, business, are at least taught about in school, but the rest of us may never hear about it as we go about making the world a better place. And so I want to take a moment today to stop you and let you know about the Rule of 72. So definitely check it out on Google. I'm not making this up. But what this is going to do is tell you how much time you need, or how much time it's going to take, excuse me, in that investment to double your money. So I'm sure by a show of hands, and I can't see anyone out there, by a show of hands, I know Alecia likes it. How many people would like to double their money? Right? Answer, tell me an equation on how I can get that done. So look into this, because realistically, if we can tell you how to manipulate an equation, right? That's what we do. That's what we're here to do. We're trying to find out what rate of return we need to double our money and how much time, okay? Many times what we're doing in here, you're gonna find it in 4 or 5 years or less. And that's when you start seeing your life change, when we're talking about generational wealth and things of that nature. All right, let's talk about some of the real opportunities here, right? Why would I become a lien lord versus a landlord? Okay, this is a quick glance of a portfolio, and it's obviously an older one, of one that we put together for one of our clients a while ago, right? And actually it's one of our members, actually. So she put together this over the course of a 1.5 years time, and as you can see, it's about 6 or so assets, 7 assets, and they're diversified, right? Heavily staked in Michigan. We love Michigan, Georgia, Indiana, and Wisconsin. So all 50 states are in play for us. It's all about returns here, right? And as you can see, obviously, some parts of Michigan, Indiana, Georgia, the mortgage payments, they fluctuate. Not everyone's paying, New York prices like Anthony or like us out here in California. But a good mixture of that, okay? Every now and then, you're gonna realize that you really don't wanna turn your head on a $325 payment if it's gonna be consistent, it's gonna be monthly, right? And so this is an old snapshot, obviously needs to be refreshed, but in a nutshell, she took down these notes, and her portion of the passive income is a $45.76 a month. So over $4,500 a month that she's making on these investments, right? And she used joint venture money, so other people's money. So to be clear, the important part about this is that these notes bring such a return that she could bring someone else in, okay? Use their money to buy these notes, and both of them split 50-50 what's being made, and her portion of it is going to be $4,500 a month. Okay, and so these are the things that some of us can say, during pandemic, that might be good. It might be good for me to get that. And what I would like to bring to your attention is that right now, during times like this, the people that are really, really intent on making sure they make their payments, especially if they can, are going to be the people who own their homes, right? So a lien lord is going to have more likely ability to collect their mortgage than the landlords are having right now collecting their rent. And ask me how I know. I'm out there in real lifetime right now dealing with this. And a lot of this is because this is their home. They think no one can take it from them. They don't want anyone to take it from them. So they have that, what I like to call it, but they're vested into the property, right? And so it's their home. They don't know where else they're going to go. If you're a renter, I might go back home with mom. I might go and find another renter. So in your mind, there's less commitment to it. So what I'd like to tell you is that I have at least been a beneficiary, and a lot of members of our community, of becoming a lien lord, right, and having more stable income than being a landlord. And let's talk about that from a political standpoint as well, right? The people that are getting under attack right now are going to be the landlords, right? When the CDC lays down a moratorium, that does not affect the banks. It's for the renters, and I'm sorry, the landlords. And you say, well, Jasmine, what do you mean it doesn't affect the banks? It's more of a suggestion. A, I'll be honest with you. And B, it really pertains to people who are Fannie Mae backed. So if you have a loan that's backed by the government, then these are the people who have to take the suggestions even, more seriously. But at the end of the day, believe you when I say, as you know, if you're living in Texas, okay, foreclosures are happening right now and people are getting evicted right now, period, amen. So not much has stopped except for the fact that we've got a transition of where the stable markets are, all right? Again, contact me for more conversation on that. I can talk about it all day. Let's talk about the diversification, right? This is one of the main reasons we get involved with this. We have plenty of assets. If you don't know, last I checked, there are over $3 billion with a B. First position mortgages being underwritten, or that were underwrote in 2020. So this was during a recession, okay? And so during the recession, the underwriting and the origination of loans, first position that we're buying, are just being produce. So all those, all of those mortgages are eventually going to trickle down to us, okay? So just understand that, especially the ones that become non-performing. So there's plenty of inventory. People asking me, am I worried about, a lack of inventory in the future? No, not by the stretch of your imagination, just because of my buying power. All right. If I could buy $2 billion worth, then, I'd be concerned. Like, you guys are not making enough for me. But with that said, I have room for us and plenty of you out there. Familiarity. I love this fact because I am heavily involved as a financier and stockbroker and work on Wall Street. And the truth of the matter is, many of you guys have no idea what to do with a stock, what it looks like, just anything. You don't know anything about stocks. You just buy them because we tell you about them on TV all the time. But what you do know about are homes. Whether you live in an apartment, whether you live in a house, you're familiar with the product, the underlying product, which is the house, right? You're familiar most likely with the fact that you have to pay on time. Many of you have mortgages, okay? So believe it or not, you're familiar with the product. And that I find a lot of comfort as someone who now talks to individuals about what they're going to invest their money in, right? So at one point I was telling people, hey, you should invest in stocks and bonds, which is solid advice, but the person I'm sitting across the table with, do you understand this product? Do you understand how, if the CEO decides to go on a binge tomorrow, that will affect your stock price, right? Do you know when it's time to sell? So what I do find is it's a more palatable conversation for people when we talk about mortgages. You understand what a mortgage is? We can talk about it. It's going to resonate with you. You're going to get it. So outside of that, excuse me, obviously we have extraordinary returns. Alicia's going to start talking to you a little bit about what she's seen personally. And obviously, if you're interested in more of that, you can give us a call. But the returns are definitely what we're in this for, right? And then for those of you guys who are out there like me, it's low beta. And so I will not bore you too much with that part of it. But again, give me a call and we can talk about the CAPM and about how you really can do loss mitigation, right? And manage your risk a lot easier than you can by trying to balance, a portfolio of stocks that you have no idea whether the president tomorrow is going to overturn, Lord knows. Okay. But I can tell you, if anything too crazy happens, you're going to be upside down again, right? And so we want to be in things where if someone owes a mortgage to you, this is what they owe, regardless of who's in place, regardless of what's happening tomorrow. And this is the payment that you owe me, period, amen. And so these are the things that are stable, and that when we're looking to retire and create generational wealth, these are the things I think you want to look to count on, or that I've learned to count on. Let's put it that way. All right. Enough with me. All right. Let's get Alecia on here because I want you guys to really start to understand how this can be something to help you transfer out of your life no matter where you are. So you could not find any more diverse people, right? Alecia and I are two different people, two different worlds, although we are now a family, right? We're now Nat Nation family, right? Yep. So.
All right. Let me share my screen. So who am I? My name is Alecia Bolton. I live in the Seattle area, so another area that's a fun place to be in for real estate. I spent the last 15 years in IT, primarily doing project management and product ownership. For the last 3 years, I've been doing real estate. So I tried wholesaling, I've tried lease options, I've been a limited partner in an apartment syndication, I've done analysis with mobile home syndications. And earlier this year, just trying to find my niche, I bought a piece of land at a tax auction. And I ended up selling it to the neighbor with owner financing. And the idea that I could, without doing anything except some paperwork, create cash flow for myself was a light bulb moment. So once that happened, I started doing research, started talking to people in the community. In May, I found Jasmine and the Nap Nation, and I started note investing. So it's all about taking action. So when I joined the Note Assistance Program, it's a results-oriented training program. And what I mean by that is I've done the guru route. I've paid a pile of money to someone, sat in weekend workshops and online education, and they were really good at teaching the basics and the nuts and bolts of the investment you're doing, but they were really not made for you to take it and go out and do something immediately. They usually wanted you to buy the next level of program and all of that nonsense. Note Assistance Program holds your hand through your first note. So they don't even want to work with you if you're not ready to take action. Another good way to take action is to partner with someone. So I'm working with a couple people on a joint venture who want to get in and learn by doing. And notes are a really good way to do that because there's notes that you can buy for $5,000 and there's notes that you can buy for $100,000. So your entry point is very low if you're wanting to learn by doing. And then the other way to do it is to find a mentor and bring value to that relationship. So I've kind of done a combination of all three with notes, and it's been very valuable. So my results, I bought a pool of notes in June, 6 notes. Some were performing, some were non-performing, some were lease options. Lease options were something I did not know you could buy in note form. I thought you could only create lease options. I closed on my 11th note this week, and my notes are in 8 different states. A lot in the Midwest, but I have one in New Jersey, I have one in Texas, I have one in Georgia. So you can buy notes anywhere.
Maryland, right? Maryland,
Yeah,
for people
Maryland.
on the East Coast.
Maryland, Michigan, Arkansas, Georgia, New Jersey, Texas. I think that's 8. And so notes are really valuable because you're location independent. I mean, I'm in Seattle. I will never actually put eyeballs on these places without hiring someone to take pictures for me. I don't have to go there. I don't have to oversee anything. So notes are kind of liberating from that standpoint because you're buying the paper. You're not buying the underlying asset for the paper. So unless you decide you want to continue being a flipper or investing in apartments and buy notes on the side, you can do it all from your living room, which is nice. So further results, I've included some examples of assets I've purchased. I have 4 assets that I wanted to give examples on. 2 are performing, 2 are non-performing. So the first one is a piece of land in Florida. And this is a picture of the actual land that I got off of Google Maps. The unpaid balance was $9,500. There was 135 payments left. I think it was a 240-month loan. I bought it for under $5,000. And after expenses, my cash on cash for the first year is 17%. And my annual yield going forward is 14%. And yield is a little different. It's a term that's specifically used in notes, and it's meant to talk about your cash flow year after year. So when you're looking at notes, you'll hear someone say, oh, I have a performing note with an 8% yield. And that yield is going to be, you're going to be earning 8% on that note every year. And it can be different than the face value of the note itself. Like this note, the face value rate of the note, I think is only 4.5%. So what was exciting about this note is I got it into my possession. I was looking at the history, and there was an escrow balance of $7,500, which was almost the entire amount of the unpaid balance. So looking into it, they had never adjusted the escrow amount for reality. And so I gave the option to this guy of, what do you want to do? Do you just want me to refund it and you keep paying? Do you want to apply all of the overage to the balance? And so what he decided was to take $5,000 and put it towards the principal of the loan and then pay off the next 2 years of the loan with the leftover. So I'm not getting a payment until 2022, but I got a lump sum of $6,000, which means that I don't have any money left in this deal. This is all profit from here on out. So that was
I have to clap on that.
Thank you. I think my overall yield for this will be over 100%, all said and done. So the next one is a performing note in Michigan. And this one has $22,000 unpaid balance, 276 remaining payments. I bought it for $15,000. And so its cash on cash is about 14%, and its ongoing yield will be about 14%. And this is more of a not standard performing note, but this is more what you're going to see when you're working with the inventory that Jasmine has access to. Normally, when you're buying performing notes, you're getting somewhere between an 8 and a 12% yield. An 8% return on your money year after year is still pretty darn good compared to, your savings account right now.
Yes,
But 14% is a pretty healthy rate. So the next 2 are non-performing notes. So this is the note I just bought this week. it's a hairy note, as Jasmine said. It's got an unpaid balance of $46,000. There were 209 payments relating. I bought it for about $30,000. The unfortunate thing about this one is the owners passed away in 2019. There is one son, and he's going through bankruptcy right now. The property, they didn't have a will, so the property has to go through probate. There is $300,000 in IRS tax liens against this property. And the property is worth about $70,000 in its current condition. So it's a hairy note. But the plan is to foreclose on it. And if it doesn't sell at auction, I'll be able to either sell it on owner financing and create a new note, generating cash flow on that. Or if it does sell at auction, then I'll get paid back the $46,000 plus lawyer fees, plus interest, plus late fees. And my expected ROI is about 38%. And that's using pretty conservative numbers.
So may I interject real quick? What's cool about this is you said you have a few strategies. You have calculated what would happen if you did get met at the auction and got paid off.
Yep.
And then if you end up taking the property back, then you would consider putting another note on it because it's in San Antonio, it looks like, or if I remember correctly.
Yep.
So that's a very hot area. And then lastly, San Antonio is a very great flipping area. So depending on what its after repair value is, somebody may want to just buy it. You might want to just flip it to someone, right? What does that number look like? Are you able to, is that an opportunity for you?
That is an opportunity. The $65,000 is the house in current condition. So that's what I would probably sell it to for a flipper. The flipper, if she company renovates it, will probably be able to sell it for between $150 and $200.
Alecia, I was just going to ask you this question, but it came in from one of the attendees.
Yeah.
And what will happen with the outstanding IRS liens?
So the way IRS liens work is that there's a hierarchy to liens on a property. So except for property tax liens and in some states homeowner association liens, the mortgage is the superior lien. So as the mortgage holder, you get paid off first. If the property goes to auction and it sells for $65,000, I get paid off my $46,000 and change, and there's about $10,000 left over. The IRS could come and apply to claim that $10,000, or they could not because it's against the prior homeowners who are now deceased. And so what happens there is the IRS can cloud the title for 120 days. And once those 120 days are over, the lien is dropped, essentially. And so what that means is you can either, if you get the property back into your possession, if it doesn't sell at the foreclosure auction, you can wait the 120 days to sell the property, or you can ask the IRS to discharge the lien, and they'll just basically write it off and the cloud will drop off the title. So you're not really affected by the IRS lien.
Nothing to be fear of, nothing to fear.
Correct.
Right, and these are some of the things we teach there at the program, because what's good to understand is that with those liens, if the IRS really, they have a lot of other things to do besides chasing down, these little properties. And like you said, they have to apply for it. So it's not granted automatically. So I have yet to see them go through the process unless there's a lot of money on the line. So if this house was worth $600,000, then,
That might be a different story.
and the right person was alerted at the IRS too. So there's a lot going on there. But yes.
Yeah.
Well, there's one more thing. Anonymous attendee. IRS lien is in fear only if it was after the mortgage was placed.
Right. So if the IRS lien was there and then they took out a mortgage, that might be a different story, but that's
Different story. Okay, different story. Okay.
You just have to know the nuances. And here's what's important. None of us here, unless Leon or whoever these guys are attorneys. So what we do is we go to the attorneys, local attorneys, and have them speak to that, right? So
Yep.
We appreciate the advice, but the bottom line is all that is fleshed out on the front end with the actual attorneys who are up to date. Laws are changing so frequently, especially with what's going on right now. Just this year, we had some very serious laws affect just how we have to, you know, create our title documents, right? So you just have to, it's best to have a local attorney who can walk you through this on the front end before you buy, so you know what you're buying and what the risks are.
Yep. So the final success story is the property I have in New Jersey. And I wanted to include this one to demonstrate that you can get into this without having a lot of money to come to the table with. So this one was an unpaid balance of $8,000. I bought it for $4,000. The ARV on the property is $155,000 and it's a duplex. They haven't paid since 2011. And if they had just been paying the mortgage, they would have been done paying for it in 2017. Don't know why they stopped paying. They're paying their taxes. So it almost seems like they forgot that they had it and nobody bothered to come back and tell them that they needed to pay anymore. So with this, we've sent the payoff letter to the borrower, and it's about a $15,000 payoff. You see what I've invested into it. I think my all-in right now is about $6,500 after paying the recording fees and the tax fees, or not the tax fees, but the lawyer fees for the letter writing. So my ROI on this one has a minimum potential of 180%. If I do end up having to foreclose on this, my expenses will go up probably to maybe $20,000, and then it has an ARV of 155. And I know that it looks good because it was on the market earlier this year. So I have interior pictures and exterior pictures, and it's got fresh paint and a nice roof. And so this one, I'm really excited about seeing what happens with it.
I guess this question is for both Jasmine and Alecia. Do you suggest doing like a quick title search before buying the note, or no need, or yes?
Yes, absolutely yes. So the way that I do my due diligence and buy notes is before I sign a purchase agreement, I run title and I go through Pro Title. So I'm paying a couple $100 to get the title run. If you have relationships with local real estate agents and whatnot, title companies, you can probably get the title run free or discounted, but Pro Title is just easy to go through. But yes, you always want to run title report because there are times when there's going to be title issues. I've been looking at a property where they're missing at least 2 assignments of the mortgage. So running the title report verifies that the person you're buying from the mortgage from actually owns the note.
Yes, ma'am.
Otherwise, you're potentially buying nothing.
There are quite a few pitfalls in this, and they're all paper related and research related, right? So the industry is definitely not cut off for everyone, but for people like Alecia who are interested in doing that nuanced research, I like to call it, right? And finding out what we can do, and you can do that from your desktop. That's where you're going to find out all those details that are going to keep you alive. But 100%, just so you know, that is part of our waterfall. We have quite a few steps, not that many, but I would say about 10 or so steps that are waterfall that you do every time you're going to buy before a note. And to be honest with you, we distill it down to at least 3 minimum that you want to do if you don't want to take our steps that we give you with our proprietary program. But there's at least 3 minimum, and title is definitely one of them.
Yeah.
You know, I'm sorry, one more question before you jump. Why wasn't the bank, why didn't the bank try to foreclose since 2011?
I honestly have no idea. It was a note that was originated by PNC, and they owned it for quite a while and sold it off. I don't remember what the timeline was. And then the next person didn't pursue it. And what probably happened is because the unpaid balance was only $8,000, it was not worth their time and energy to do anything about it. So they sold it as a bundle of notes to somebody else who had kind of the same thing, until it gets down to someone like me who doesn't have a large fund yet or a lot of capital, and so is happy to buy a note for $5,000 that I can get a $15,000 payoff on.
Right, and if I can interject too, you know, you have to think about it. When you think about a bank like PNC, right? When they originated this, they've got almost the first 10 years of your mortgage payment is just interest, right? Right?
Yep.
We all know this. So they made their money on this so many times. I can't even tell you how many times they made their money on this note. To ask them why they would hold on to this is a better question. Why would you continue to hold on to this note? They only owe $8 grand. Like she said, this should have been paid off by now. And so at the end of the day, we are the ones that can see the opportunity within this. They've made their money. It's not even worth a dime. And these guys are doing sometimes $400 million trades. So let me repeat that, $400 million trades. So when I come along saying, I'll take your trash, you know, things that are not performing, that are balances under 15,000, they're like, please, please, please do make me an offer. And so it's really, when you think about what we're in this game for, and when you start looking at the returns on all of her assets, that's what I want you to think about. These banks are getting these same returns here. We've seen anywhere projected 183 to, I don't know if you can, but can you scoop back 1 or 2 slides real quick just for the fun of it? We've had 180, 38, 14. So everywhere from 14 to 181 projected returns on this, right? The banks are realizing similar, if not more than this, believe it or not, more on their preferred assets, the ones that they are keeping, okay? And so this is literally and figuratively whether they're junk. And you can see just by looking at the pictures. To us, the returns are nice and we're finding them out. But when you look at this house in New Jersey, they're not, you know, this is not the Florida house or the house in Hawaii that they're waiting on, you know, the condo in Manhattan, right? So really banks have many different reasons, and they're all surrounding money why they would get rid of this stuff. Great question.
Yeah, Jasmine, this is a performing note, right?
Yes.
This one in particular, yes.
I guess it's just, you know, why is the bank getting rid of it for that price? Why?
Well, in this particular case, again, I'd have to be speaking, I don't know then why this particular, but a lot of these guys are just selling to get rid of assets, right? So first and foremost, some banks will buy inventory to add value and sell it. So hedge funds, they will buy them at a discount because they can buy in bulk. Let's say they buy $45 million worth of assets. So that's smaller than the $400 million. So they're going to buy 45 million. They're going to, the easy stuff, the stuff that's really performing, they're going to take that. They're going to see phenomenal returns on that. Numbers I don't even want to quote. The rest of it is like, well, how much effort do I want to put into this? And depending on how big of a firm you are, your costs are going to be a little bit more expensive than Alecia's, right? Our attorneys are going to cost us maybe $1,500, $2,500 to get the foreclosure done. I can tell you this, PNC Wells Fargo, just to touch the file, 10 grand, these attorneys. They have, you know, so it's not worth it for them. In this case, it's performing, but a non-performing to go after and go after it. And then also in this one, they have 276 payments left. Believe me, they'll make more money just selling the note, right? So they make points on the front end when they originate it, right? They may have held it for the first 20, 30 payments, and now they're looking to get it off their books, and they're going to, Alecia paid, what did you pay? 80 cents on the dollar for this or something?
A little less than that, but I think 70 cents.
Right. So they're going to get close to 70, 80 cents on the dollar for it. So banks want to be liquid in a nutshell, right? So they're really, not until recently, or the last 15 years, when they started having servicing arms, were they interested in holding it. They just wanted to get their money back and originate, get their money back, originate, 2 points. Now you may find GMAC homecomings or other servicing arms because they are going to hold on, but they only want to hold on to the cream of the crop.
And just one more question, Jasmine. You guys, of course, you guys have been in the business. You're swimming in it. Are you seeing a lot more performing notes coming available or non-performing notes? I mean, I know the reason for non-performing, but are you seeing a lot of these banks changing their policies and regulations and the reasons why they got to get rid of it? Because they got to raise money. They got to raise money, and they got to start getting rid of dumping some of these deals. But are you seeing a lot more of that now during COVID?
Yeah,
you are
100%. I just got Alicia's looking at a whole performing note tape. Isn't that tape performing? The AON tape you're looking at?
Yeah.
So yeah, so you have to understand banks sell for a lot of reasons, like you mentioned, right? They might be, a lot of banks just have to liquidate at the end of the year. Some funds are only 5-year funds. Okay, this might be the 5th year. They got to liquidate them. So there's so many different reasons, and yes, the recession is causing a lot of banks to liquidate, you know, prematurely, because either A, they need to be liquid, right? Banks like to be liquid in these times because if you look at the history, right, economic history of all these recessions and ups and downs, what they'd like to do is get liquid right now, because as soon as the dust settles, they're going to come back and buy everything for pennies on the dollar. And so right now, go ahead.
Oh, I'm sorry. Go ahead. No. Go. Just,
my last thing was going to say, like right now, values are holding up, right? California, Jersey, a lot of places, values are holding up. Everyone's walking around smug. So banks want to liquidate, get their money, And then when the values hit the ground, because it's happening, it's going to come, mark our word, they're going to be the ones out there buying. So go ahead with the question. I'm sorry.
Yeah, and this is probably interesting because there's attendees are checking this out right now, and maybe they may not want to come up with the 15,000, but they may want to come up with 5,000. Do you guys have set do you have set groups where people could invest 5,000 or 10,000, not the full amount, but Alecia, would you allow these guys to come in and give you some money? Not, are you, like you're saying, you're putting together a pool. Is there a requirement of how much money they could give you so they could jump into this?
Alicia's going to be putting together a pool, so she'll have more specifics about that. I mean, a fund, but that's where pooling money together is pretty tricky, and that's not what we do at the Note Assistance Program.
Okay.
So Alecia,
Okay.
talk to what you're planning on doing.
Okay.
So what I'm planning on doing is more like an apartment syndication. So you're going to have to be an accredited investor. You're going to have $50,000 or $100,000 to invest, but that's the fund. What you can do with a smaller amount of money is joint venture with someone. So if one of the folks on the call called me up and say, hey, I want to learn, I only have $5,000, I would be like, all right, let me partner with you. I can bring 50% of the funds, you can bring 50% of the funds, and we'll walk through, how the note goes. And I'll provide you some education as well, if that's what you're looking for, and we would structure it that way. If you only had $5,000 or $10,000 to invest, and you wanted to have more of an active part in it, a fund is probably not the way to go, because you would be a limited partner in a fund and mostly just reaping the benefits of the fund.
Right, and there are minimums because of the type of asset that we're dealing with, right? And so, Alecia, how did you get started? Like you said, you decided to go, if you want to be like Alecia, you go in, right, and you get the proper education. And so our program as well is where you can go in and get trained to be like Alecia, and you can also JV with her, right? So you just really have to figure out which way you want to go, but Alicia's definitely going to give her information at the end, so you can reach out to her if you want to JV, because there are minimums to get in, right? This is not a situation where you want to borrow $5,000 or put $5,000 on a credit card to do these things, right? This is not the situation. You want to make sure you're in the right place to get involved with the situation. So what I like to tell people is you want to bring a minimum of $25,000 to $35,000 to the table to get started comfortably, okay? And I'll be honest with you, if you're not at that place, then Notes is probably not the best place to start out with, right? And so not a huge investment, but you want to have that. And here's what that would consist of. To get to that number, it would be the $7,000 for the training program if you want to get some mentoring, like Alecia said, right? And then you'd have the average note. As you notice, you can purchase between $15,000 to $25,000. That's the average note on our trade desk. So let's say you pick up a note for $15,000, right? So now you're in this thing, what, $22,000 or so, right? And now at this point, the average note, depending on where you buy, in the Midwest, so not Florida, not California, not New York, for example, but the foreclosure cost will be about $5,000 to pay the attorney, 1 year's worth of back taxes, right? If there's a big tax problem, then you have to address that as well. But on average, another $5,000. So now that's where that $30,000 number will come in, right? You're between $27,000 to $30,000. So that's what you want to do. Get your first note under your belt. And then you off to the races like Alecia, knowing what you're doing, what you're getting into. Education is key, and that's what we're going to talk about soon. Do you have anything else you want to share, Alecia?
Just that about half of my notes, mostly non-JV partner notes, are in my solo 401k. So you can invest in these with your self-directed IRA or your solo 401k, and that might, it won't give you right now returns, but having a 14% return in my 401k, it makes me a pretty happy camper. So that's another way to do the learning if you don't have a lot of upfront cash, but you have money in a retirement account.
That's a great point. So a lot of you guys are thinking, I don't have the money up front, and the recession, that would take away from my, my day-to-day expenses. Like we said, and Alecia and I can both help you look for, is that there's money. If you had other jobs, there might be a 401k laying around or something that you need to roll over. But voila, I got $50,000 I can work with. I didn't know. And so can we show you how to use the 401k, roll it over to self-directed IRA, and also use that funds to get the training with the program? Yes, we can. Many people have used the self-directed funds as business development, right? So they can build that to their IRA. And then they can also go ahead and use their money from their IRA to invest. And so like Alecia said, if you get a payoff, if you're just getting a regular payment, this turns out to be much more than any company matching, okay, to your retirement. And so this is when people get bright-eyed and bushy-tailed. When Alecia, tell them about your goals because when you showed up, I think you said you wanted to maybe retire quote unquote, in 2 years, and now you kind of sped that up. Tell us about that.
So I've always wanted to use real estate as my vehicle to get out of my W-2 job. Still have a W-2 job. And so my goal starting with notes was, by the end of 2021, so about a year and a half, I would be done with my W-2 job. I'd be generating enough passive income, so performing notes, that it would cover basically what my W-2 job income would be. And then I'd, do other stuff. I'd have freedom, the elusive financial freedom, which is not so elusive anymore. So,
Nice.
Between this and then starting the fund, I've actually moved it up that by probably first quarter next year, I should be able to retire from my W-2 job.
So this is the power of that rule of 72 and all that stuff, right? So really, I just applaud you for sharing your story. I don't know if we ran through any of your slides, but let's see if you have anything else you want to share with the audience. And then questions, of course. Yes.
The only slide I have left is my info. So feel free to email me. I will be happy to talk to you about notes.
Guys, we have about 13 minutes, and there are 4 questions I need to ask Jasmine. But I'd like to ask the first question to you, Alecia.
Yep.
How did you meet Jasmine?
So I belong to a real estate group called REN, which is the Women's Real Estate Network. And one of the women in the group was doing notes. And this is when I was still collecting information. So this is probably March of this year. And she's like, this is my journey. I worked with the cash flow chick, Paige Panzanello. And then, I worked with the note assistance program, Jasmine. So it's like, all right, I will contact these people. And I talked to Jasmine, and our 1 hour intro call, I think, went 2 hours, just because I was mining her for information. We were just talking about all sorts of stuff. And I knew after talking to her that program was the right place for me to be.
Great. And so how long have you known Jasmine for?
Since May.
May.
So
Okay, good.
6 months.
Good. Very good. Very good. No, it's very good.
So if you're able to look at part 1 and part 2, right? The last lady we had, Tanya, she's been with the program for almost 2 years. And this is someone with the 6 months. So it's really about your trajectory and how hard you're going to hit the paint.
Very true. Jasmine, I'm telling you, I was very impressed with Tanya, and I'm also very impressed with Alecia, and I'm very, very good. I'm really impressed with it. And I know that nobody left this presentation, so that's a good sign as well. We got 4 questions I got to ask you. 4 people that were unable to. They were unable to get onto the live show here, so that always happens a lot of times. What type of time would I have to invest in this system to be successful?
I think, like we mentioned, it's kind of, it's up to you and how you're going to hit the paint. But Alecia, she's been, depending on what you define the success with, right? I think she's been very successful. And it's been, 6 months, I think we've decided?
Yeah.
So just depends on what type of effort you're going to put to the table and what you're coming to the table with, right? She had already found some funds of her own to use. So really, it's your journey. And what I was going to show you at the end of my slideshow was a few steps that we can show you to take, to move forward, just in case you're interested.
Now, when someone wants to hire you, Jasmine, they don't need to go and see you. You could do it all virtually now, right? Everything's virtually.
Like Alecia said, are we going to meet for the first time in person in December, or?
Yeah.
That's exciting.
And a lot of people joined us straight off of the podcast. Really, it speaks to certain entrepreneurial spirits, right? And so that's what we're looking for. It's definitely a niche for people. Alecia and I hit it off for 2 hours on the phone because we both were just like, oh my goodness, you take action, I take action. Let's try it. Let's see it. Did we blow up anything? Okay, great. So it's that type of attitude that's going to get you far.
That's great. Another question, Jasmine. What are the characteristics you have seen in the most successful investors in your program?
Right there, right? I think the things that you'll find that with Alecia and Tanya, right? 2 people, 2 different coasts. So Alicia's in Washington, and then Tanya was out in Maryland, right? And so different background, 2 different people. But what I do realize is that they both have a certain level of aggression. Obviously, it's professional aggression, but towards their whys and what they want to get going. So it's not necessarily in their attitudes, but I'm going to achieve these things. So both of these people showed up like, Jasmine, I have something I want to accomplish. Can you help me get there or not? So we cut to the chase. The other thing I want to say is just having the ability to stick to it, right? The businesses, it sounds, we're showing about all the ups it seems, but it takes a while for you to get, the guts to buy some of the things Alecia had. So if you have any response to that, Alecia, what did it take you to reach this level of success? Because this is a foreign product for you a year ago, right?
It was. I mean, I have mortgages, but I'm a consumer of mortgages. So I know the basics, as you said. I know what the house is like. I know what the paper looks like. I signed 8,000 signatures on those documents. But I felt like I got a really good grounding of education, both through the program and with all of the podcasts I listened to and articles I read. And so I felt very confident going into it, knowing that I had a good educational background. And also, one of the benefits of the Note Assistance Program, and I can't stress this enough, is that you have people in your corner, both Jasmine and Natasha and the entire community, who have done, I don't want to say everything because I don't know everything, but there's not a situation they've been in that they can't provide you some guidance on how to get out of it. So you have this community in your behind you that is just huge. And so the way they run the program and the community behind you really gives you the confidence to know that you can charge full speed ahead if you want to, and know that if you trip, you'll have people around you pick you up and help you out. And might you lose money? Maybe, but the way they teach it makes it kind of hard to lose money on the deal. You just might not make as much money as you're thinking you will.
Right, well put.
Just going to ask two more questions. What's the most common path of education for your members?
So just in case you're watching this, you're saying, what should I do? Okay. I may not be ready to join a program or JV with Alecia, but I want to learn more. We have a path of education, and this is what most people take, including Alecia, right? Alecia, you listen to the podcast, I guess, right? As well?
I did. I'm still not all through it, but yeah.
Good stuff. Well, we're creating new ones weekly, right? So the best thing to do is, if this is very foreign to you, we want you to stop by. We have a free educational podcast. It's called Naked Notes. It's found everywhere: Spotify, iHeartRadio, iTunes, you name it, online, on our website. You can even go there and click on podcasts and listen to it there. We also have it on our YouTube channel, right? So there's a lot of free education out there. If you give us a call, our assistant Latrice will even recommend books that you can read, right? So there's a lot of stuff that you can do before you start engaging with us. As Alecia mentioned, we are a program about action, okay? And so we want to make sure that you're ready to take some form of action, if not the ultimate form of action, within, a short period of time after you decide to call us. So the podcast, lurk around there all you want, educate yourself, get familiar with what we do. We have plenty more success stories from our clients and members on there, so you hear other people's journeys as well. You may just relate to one. The second thing, we have a 2-day training workshop. It has now since been moved online, as you can imagine. So we have the virtual mortgage note lab. We did our first one this January. Alecia, you attended, is that correct? Excellent.
Yep. You had it last weekend. We were guinea pigs, but I can't even imagine what the live program would have been like. Because it was like, the energy was great. It was great.
Thank you very much.
Yeah, Alecia, how long did it take you to buy your first note through this class? I mean, how long did it take you to get this thing, to really get it down to a science and feel confident to go out and buy your first note?
Great question.
So it took me about a month and a half before I bought my first note. And I did come in with some education, so I wasn't learning, I wasn't a complete newbie. So I went through the education piece of the program a little faster than what some people might. But it also helped that they had some amazing inventory. Like the first month or two that I was in the program. So finding a note was not difficult. Finding a good note was not difficult.
So you're saying the inventory, Nap Nation? You mean they have the great inventory?
Yes. So come for the education, stay for the trade desk. It was
I love it.
Every month they send out a tape that has approximately $1 million or $2 million in unpaid balance. Some are performing, some are non-performing. Most of them in the $25,000 to $50,000 unpaid balance range. Some higher, couple lower. But every month we get that in our inbox of being part of the community. And
Yes.
not having to do the piece of having to go out and find my own inventory is huge.
Okay, and I guess that's the last question right there. So why can't I go directly to the bank and do this myself? And why do I need to go through this class?
Well, I think the best way to answer that is go ahead and give it a shot, right?
Yep.
Two things. One, you can't walk into Bank of America and ask the teller for some non-performing notes. They're going to ask to call security on you, okay? So don't ask for that, okay? Two, you really need to know who to get within the bank to get it from. And so these are going to be called the asset managers. So I'm going to give you as many hints as I can. So asset managers of the banks are the ones that you need to get in contact with. And these people don't have phone numbers out just laying around. Three, there are some courses out there who will teach you how to cold call banks. And since this is New York, you guys have a lot more exposure to it. I grew up out there, so I know if this is a New Yorker asking, yeah, you have banks all around, you might be able to try to figure out. So the next step is trying to convince someone that they can show you the inventory, right? So this is private inventory. It's got real life addresses, social security numbers. So any Tom, Dick, and Harry can't just walk up and say, hey, send me that tape, okay? So once you get past that and get verified that they feel comfortable sending you the tape, when you go directly to a bank, let's say you've got their attention, the next thing they're going to want you to do is buy $1 million worth of notes, and minimum $3 million worth of notes. That's on the small trades. These guys usually do $4 million trades, $4 million trades. So the person that asks that question you want to ask yourself is, do I have the volume to buy from a bank directly? If you do, then that's great. But you have the volume to do that on a regular basis is the next thing. So the smart investor is going to realize this. Banks are here for the money. Even if I did have, because I have plenty of people who show up to my program with $15 million of their own. Even if I went out and outlaid all $15 million of that on my own, right? And I did that over the next 3 years. Once I run out of that money, do I still have the attention of the bank? And so what we built here is a program where we are buying from these banks on a consistent basis every single month, okay? Minimum $500,000, but on the high side, 2.3 or more $1 million on a regular basis. So these guys have relationships with us. They're not going anywhere, and they expect to hear from us all the time. So if you really want to get in and really have relationships with banks, you need to figure out how you're going to be able to buy on a regular basis and buy volume. The average fund that's buying from Fannie Mae direct, so this is the top of it, okay, you have to have a minimum of $50 million to buy direct from Fannie Mae. That's the minimum. So if you have that, then I do believe you want to start marching up there. But again, you just have to kind of get through the paperwork, fill out the applications, and all that good stuff.
It's great. Thanks, Jasmine.
Yeah, it's normally reserved for, it's an industry that's normally reserved, obviously, for the hedge funds and things like that. So I'll wrap it up here by just kind of going through the last things we have. We have an online training, video training program for people who don't necessarily want the hands-on interaction or just may want to just go through the proprietary training program with videos. A lot of people learn better with video. So we are here for you with that. You can go to our website at noteassistanceprogram.com and check that out. We also have a hands-on training program. That's what Alecia took. So that's what she spoke to a lot here. And then lastly, once you get up and running, which Alecia hopefully will be coming to as well, but what she's on the path to doing is doing private family office development and or building a fund. So that's where you do it at the very last when you take it into a higher level. And so definitely, this is what we here have found to be a proven path to success.
Great, Jasmine. Jasmine, we came to the conclusion. 1 hour came. Can you please just tell us really quickly what your topic may be for part 3, your last webinar? And I'm not sure if it's going to be a panel or if it's going to be solo again. But again, both of your webinars were just awesome and really great guest speakers. I was very impressed. Thank
you, Alecia, by the way.
Really, you were great, Alecia. I learned a lot.
Thanks.
Yeah, I'm hoping it's a panel. And so what we'll probably do is interview some of the people that you need to get in touch with. So just like the person who asked that question, what we love to do is empower everyone. And so really what we like to do on our next one is hopefully interview and in a panel fashion, people that, will be resourceful for you if you're out there trying to get notes, whether it's through our program or by yourself.
Oh, that's great. Once again, guys, I'm not sure if we're going to be cut off here, but I want to thank you. I want to thank Jasmine and Alecia. Really awesome. And we will be sending out all the attendee names to Jasmine and Latrish. They will definitely send out a thank you note with all information about notes, naked notes, and Jasmine's information, as well as Alicia's as well. So again, we will definitely submit this out to everybody. And the video will come as well. We will send out the first video just in case the new people that logged on were not able to see part 1. So the new video will come, plus the thank you note information and her contact information. Once again, thank you everybody for registering and enjoying us today. Thank you.
Thank you very much.
Take care, everybody. Thank you, Jasmine. Thank you, Alecia. Bye-bye.
Thank you. Bye.